I am proud to highlight Karnataka's crucial role in driving innovation in the aerospace and defense sector. Karnataka contributes to 65% of India's aerospace-related exports and caters to 70% supplier base for India's aerospace and defense industry. Supported by robust infrastructure, skilled talent, and global partnerships, Karnataka is shaping the future of India's aerospace aspirations. Invest Karnataka 2025 will further solidify our state's position as a preferred investor destination for aerospace and defense companies.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, bang in the middle of the week. But we've already seen 5 days of losses for the Indian stock markets. Well, of course, yesterday is where we actually saw a broad-based sell-off, not just the Nifty losing streak, testing 23,000 levels on the intraday mark as well, but even the sharp sell-off in the mid and small cap stocks that dampened the sentiments throughout. We're already seeing some ticks coming in on the pre-open trade now. 306 points lower again, 22,767. But I hope this improves for the better as it moves forward from here. Remember, it was the broader markets taking a bigger hit, coming closer to entering a correction zone. Mid caps down 17% from record high levels. Small caps even worst hit. Now, the Nifty index itself is currently trading 4% lower to its 200 days of moving average, and nearly 84% of the broader Nifty 500 index has already slipped below that 200 days moving average as well. So that only shares with you how the breadth of the market has weakened. Things are improving on the pre-open trade now. We are back at 23,000 mark, 50 points lower. This is still a more sensible figure to really look at today. Yesterday, we saw BSE listed companies losing 10 lakh crore rupees in market capitalization. But again, today, what will be important to watch out for, how the overnight cues from US, opening cues from Asian markets, the gift nifty trends, and some of the earnings will continue to take shape and, kind of make their presence felt in the markets. Mixed closing for the US markets. Dow higher, S&P 500 managing to just eke out gains. Nasdaq, however, down by 0.3%. This is right after what we've also seen, that Jerome Powell, US Federal Reserve Chair, has emphasized again that the central bank is going to be focusing on curbing inflation and signaling that policymakers are not in a rush to push interest rates further lower. Asian markets, definitely a sign of green across the board is what you're looking at. And we are now at 23,000, slightly lower than what the gift nifty trends were indicating already. Now, when we look at the kind of impact that earnings, of course, will continue to make their presence felt. And apart from the secondary markets, there's also a new IPO that's opening today, Hexaware Technologies, that we will be focusing on. But let's welcome our guest on board. We already have Mr. Avinash Gorakshakar joining in, Head of Research at Profitmart Securities. Avinash sir, warm welcome. Good to have you with us. Long time. I wanted to understand with you, as far as the major triggers for the markets that we were penciling in, they are nearly done. You have the union budget that's been done and dusted. We have the RBI policy that's done and dusted. A large part of the earnings are out of the way in Q3 as well. We also have indications the Donald Trump presidency has already come into shape. He's taken office and we are getting used to of that. After all of this, the markets are still not getting the confidence to get back on track, despite no major negative triggers from any of these factors have actually come out. What is your own sense? Why do you think the markets are still not getting confident to regain the momentum?
Thanks, Sakshi. I think clearly yesterday was a day full of panic, and I think markets reacted, more than pessimistically. I think something significantly above the, mark of pessimism. But my sense is that, yesterday one or two things which were very interesting and were positive for the market was that the rupee hardened after a very long time. And this was finally, after RBI said that they are aggressively looking at doing their open market operations, which gave a sense of relief for the currency. So I think the real, challenge in the near term for the Indian markets is basically the currency factor. If the currency improves, I would not be surprised that we could see a good bounce back. In fact, today, quite frankly, after yesterday's horrendous fall, what we saw on the Nifty and the Sensex, I think today may not be such a bad day. We may see a little volatile session in the first half. But I think in the second half, hopefully the market could get back and bounce back equally sharply. So I think, all is not lost, but yes, I think clearly markets are very clear now that small cap, mid caps, SME companies, the noises in the market are clearly reflecting that valuations had gone up very fast in a very short period of time. So I think clearly to that extent, my sense is that it's going to be a little challenging in the near term for this pocket. I think the best part is basically, I would say that, it's better to wait and watch. But I think today's session, initially it may open weak, but I think later on some value buying could definitely come in. We are very positive that most of the mutual funds would definitely now look at start accumulating, stocks across sectors again. And as you rightly pointed out, the budget, the RBI policy has been quite constructive for the markets. So I think these are things which would start taking shape for the markets in terms of better earnings numbers. From the quarter starting April, maybe the January to March quarter is also going to be equally challenging. But I think at least in the near term, the market seems to have stabilized. I don't think today we could have another horrendous sell-off like what we had yesterday.
Okay. Mr. Gorakshakar, any cues that you believe we should be looking at from Prime Minister Narendra Modi's visit to the US? Already we are seeing some statements coming in. We are probably reducing some import tariffs on some of our key luxury products, including bikes and automobiles. In the US, there's already been a decision that, the kind of judiciary processes that were on the Adani group after the Hindenburg reports, those have been probably put to bed at the same time as well. What are you really looking forward to that will be key for the Indian markets and Indian economy to keep in mind and to react on as this crucial meeting gets underway?
No, I think clearly, Sakshi, this is definitely an important meeting because markets are clearly awaiting what Mr. Modi announces once he comes back to India. I think something on nuclear energy, something on the defense side, something on basically even broad, infrastructure. I think there's a lot of investment which US is planning to make in India. And on the import tariff side, I think, our sense is that India would be a country which could possibly not be that badly impacted like other countries like China, Canada, etc. And typically, I think broadly, I think in the budget also, the government has reduced customs duties across many products and items, which clearly gives a hint that they have already made some adjustment in the overall import duty structure. So I think we'll have to wait and watch, Sakshi. But I think obviously the mood is positive. Yesterday, I think we heard the Prime Minister talking in France, and I think the kind of reception he got was clearly evident that India is a very important variable in the global marketplace. India definitely is a promising market for many, superpowers. So I don't think we are going to see any big negative surprise. In fact, we could possibly see a host of announcements coming once Mr. Modi comes back. So I think we keep our fingers crossed. But I think definitely something positive if it comes out, then the market should obviously react positively to these developments.
Fair point. Let's actually also welcome our other guest on board. We also have Osho Krishnan, Senior Research Analyst of Technicals and Derivatives at Angel One, joining in. Hi, Osho. Warm welcome. Markets have again settled in the pre-open rate just above 23,000, 21 points lower in trade. We have PSU banks, pharma and IT probably showing us some signs of an improvement. Avinashji just said that hopefully we will not see the horrendous sell-off that we saw yesterday. Things might improve in the second half. What are the technicals really telling you? How should the benchmark indices be looked at, Nifty and the Nifty Bank today?
Very good morning, Sakshi and Avinashji. Well, looking at the overall setup that we have seen from the last 5 days, there has been a consistent sell-off in the market. But looking at the overall momentum, I'm expecting, even I'm having a similar kind of a view that today we can see some kind of breather in the market. Not very decisive positive, but a kind of a halt to the sell-off that we are witnessing in the market. Now, the technical perspective showcases a very strong bearish formation on the daily time frame chart. But looking at the placement around the zone of 23,000, which is a psychological mark, and also a decent writing from the put writers, not very significant, but again, a decent writing has been seen around 23,000, followed by 22, 8 and 700 strikes also. But I'm expecting that with the kind of a sell-off that we have seen yesterday, today there can be a sense of pullback in the markets in some of the counters. So overall, the view remains sideways to negative. On the higher end, again 23,300, 350 remains a very strong resistance for Nifty, and until it breaches the same, one should not be very much complacent with any kind of pullback and not should start buying at very aggressively at these levels. And on the higher end, even I have a view that once Nifty breaches the or reaches the zone of 23,350, then for aggressive traders, one can look for opportunities on the sell side. While on the lower end, 23,000 and 22,950 is a zone where one can look to accumulate again the aggressive traders only for a higher target of nearly 300 to 350 odd points in Nifty. But comparatively, I expect that Bank Nifty is placed at a decent position. Firstly, it is near to the bullish gap that we have seen on the daily formation chart, and I am expecting that it should hover or it should give a stability in the market. So, banking space and financial space should definitely be in the limelight for the day, and there can be any or decent bounce that can be seen in the banking and financial space for the day. For Bank Nifty, I am expecting that 49,200 and 49,000 should be seen as a very strong support, while on the higher end, again, 49,800 to 50,000 is the zone where one should try to lighten up their long positions in bank.
Okay, fair point. Well, Osho and Avinashi, we'll take a very quick break right here. And when we return, viewers, we will be discussing key stocks that you can keep an eye out on for today and also for potential positional investments as well. Stay tuned with us.
Karnataka is the fourth largest automobile producing state in India, contributing 8.5% to the nation's vehicle production. The state also has the highest number of EV charging stations, boasting an impressive 5,765 public stations. We were the first to introduce an EV policy in 2017 and will soon unveil a clean mobility policy at our upcoming Global Investors Meet. Backed by our progressive policies, world-class infrastructure and a skilled workforce, Karnataka is paving the way for growth in both traditional and EV sectors. Join us at Invest Karnataka 2025 and be a driving force in the future of automotive and EV innovation.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi Batra. With me are two special guests who are helping us out navigate through the market moves. Avinash Gorakshakar, Head of Research at Profit Mart Securities. And with us is also Osho Krishnan, Senior Research Analyst, Technicals and Derivatives, Angel One. Very quickly, Osho, two key stocks that you'll be looking at for today.
One stock which is looking very positive to me, even in such kind of market, is Bharti Airtel. Bharti Airtel in the last week have seen a very strong consolidation breakout and is hovering at the higher zone. So I'm expecting that there can be still further room in this counter. So one can definitely try to buy Bharti Airtel around the zone of 1690 or 1700 odd levels. And the higher target that I'm expecting in a very short term perspective is 1740 to 1745, while it is advisable to keep a stop loss of 1670. The other counter which is looking positive to me, but that's a conditional buying, is Grasim India. Grasim is having a very strong consolidation around the 20-day exponential moving average, and we have seen very strong trading volumes in this counter in the last trading session. So I'm expecting that once the counter surges above the zone of 2500, then from there onwards we can see a very strong continuation towards the 200-day simple moving average. So Grasim will be the bet that one can look to buy only above the zone of 2500, keeping a stop loss of nearly 2470 for upside potential target of nearly 2580 to 2600.
Fair point. Okay. Avinashi, I wanted to understand from you, so far the earnings that have come out, how have you assessed the earnings season thus far? What has stood out for you in terms of outperformance, and where do you think in terms of sector or stocks, huge underperformance still persists?
No, I think clearly, this time the quarter three numbers have been definitely below expectation. But I think there have been some sectors, Sakshi, which have done remarkably well. I think the hotel and hospitality sector has done remarkably well. Some auto component companies have also done well. And broadly, I think, the housing finance market has also picked up pretty well. So I think, these are good pockets of opportunity. And as Osho was mentioning, telecom infrastructure players, which are riding high on the telecom sector growth. Companies like Indus Towers have also done pretty well. So I think, clearly one has to be now clearly selective. We expect earnings kind of bounce back and some sort of revival from the April quarter. And obviously the March quarter could also be equally challenging. But I think one good part is that consumption and typically, the broader FMCG sectors are definitely going to see now a strong pickup, from the new financial year. So I think all said and done, this quarter numbers were slightly better than Q2, but Q3 was definitely, disappointing if you look at it on a YY basis.
Okay, fair point. So that's the overall earnings trajectory. Let's also look at key stocks that you can look at, viewers. And now the markets have started ticking. Let's straight away dive into the markets. 23,045 for the Nifty, 0.1% lower in trade. The Nifty Bank is slightly better off, 0.08% lower, 49,361. So that's the benchmark indices. IT, Pharma, PSU banks and media stocks, the only four key sectors that are in the green. But let's look at the pain points over the last few days. Realty stocks, 0.6% lower. Metal stocks, just slightly better off, about half a percent lower. No, it's improved now, it's in the green. You have the realty still under pressure, 0.7% lower. Oil and gas down 0.6%. Small caps, half odd percent lower. Even the mid caps are down about 0.4% as well. So the broader market pain continues. Apart from this, you also have the autos, consumer durables in the red. You also have the banks slipping into the red as well. No, but IT is bucking the trend, half a percent higher in an otherwise weak setup in the market right now. Let's also look at the key stocks then. Let's look at the heavyweight counters from the IT pack. How are they driving the momentum higher? Infosys, TCS, Wipro, HCL Tech. Let's look at all of these pack because these are the counters that are probably holding up the sentiments. 0.7% higher for Infosys at 1890 odd levels. That's the kind of move that we are seeing on this one. TCS is also up by a percent. So heavyweight IT stocks definitely coming in into the thick zone. But advances to declines ratio still points slightly skewed towards the declines. 772 declines to 716 advances on the NSE at this point in time. Top losers on the Nifty are Reliance Industries, again under pressure, 1.2% lower. You also have ITC that's declining, 1.6% lower. Hero MotoCorp is 2% down in trade as far as the top losers on the Nifty are concerned. You have M&M also down by 1%. So the auto stocks are dragging. Axis Bank and Adani Ports are some of the other stocks on the Nifty that are in the declining zone. You also have BEL, Power Grid and Adani Enterprises that was otherwise bucking the trend yesterday, also slipping slightly lower in trade. Now let's look at the metal counters. They are probably regaining some of the momentum and the losses that they had made over the last few days. So Steel Authority of India, this is right after the earnings have come in. The stock is up about 3 odd percent. Nalco is up 2%. Welspun Corp, NMDC, Jindal Stainless, Hindustan Zinc. These are the counters that are up and about. So metals are definitely doing well. You also have some PSU banking counters that are actually doing well at this point in time. Looking at the winners, you have Union Bank of India, Bank of India, Indian Bank, State Bank of India. These are the counters that are actually pulling up. Within the private sector, you have ICICI Bank pulling up, but then you have a mixed trend because Kotak is down, Axis is down, IndusInd is down, but there's a mixed trend right there. Sectorally, largely all the sectors are down, barring just metals, IT and PSU banks, and slight gains that are being seen on the media stocks right there. Let's look at Osho. Osho, how are you looking at the opening, both in the index level as well as sectorally?
See, overall, index is hovering around the same level, so there is no change in the view. I am expecting the same. 23,000 can be seen as a very strong support for the intraday traders. While from a stock specific front, again, as you mentioned, that metal stocks have started gaining some traction. So I'm expecting that with the kind of a sell-off that we have seen in the last two trading sessions, there is a possibility of a pullback in major of the steel sector. So I'm expecting that on the technical front, JSW Steel is having a very strong placement above the short-term moving averages, and with the kind of a movement that we have seen in the last trading session, there is a possibility of a decent pullback. Not very much aggressive on the targets, but for the day, I am expecting nearly 977 to 980 kind of a target in the for the day trader. So one can definitely try to buy this counter with a stop loss of yesterday's low of 948. So overall, this counter is looking positive. There can be a decent pullback that can be seen in JSW.
Avinash sir, what is your take on the metal space? I mean, this was the first space that saw a knee-jerk reaction of Trump tariffs being announced on the metals, steels and aluminium space. Do you think metals will continue to be in a vulnerable zone? It's better to probably stay away till the time there is a clarity of structural rally shaping up. How are you approaching this space?
No, I think clearly, with tariffs announced by Trump, on the metal sector, I think clearly, Sakshi, it's better to wait and watch for at least a
Hmm.
couple of quarters. See, I think these kind of bounces are quite obvious because metal is a space which has got a very significant alpha and a high beta. So obviously, any rise or fall is equally sharp. So my sense is, looking at the kind of quarterly numbers in quarter 3 and expectation in January to March quarter, I think it's better to wait and watch. Although domestic consumption has started going up, globally, I think if tariffs increase, definitely they pose a problem for most of the metal companies. So I think clearly margins would be under pressure, and we'll have to see how each company reacts and repositions themselves in the global market.
Okay, so that's as far as the metals are concerned. But I also wanted to take a cue from what you were earlier mentioning on auto space. I wanted to get. I think the entire sector has also come under pressure after Eicher Motors numbers. Also, the two-wheeler counters once again getting under pressure. Today also, Hero Moto is down. I mean, like there are two debates that are going on. One, the consumption boost that the government announced, and whether that will trickle in and into an additional benefit and a rising consumption in at least the two-wheeler space. And the other one is, of course, about the valuation comfort or discomfort at the current levels. How are you approaching the entire auto space, both four-wheelers and two-wheelers right now?
No, I think within the four-wheeler, Sakshi, we still continue to like companies like Mahindra and Mahindra. We believe that,
Okay.
despite a challenging quarter, the company was one of the few companies which could outperform the entire sector. I think if you look at numbers from Tata Motors, Ashok Leyland, Eicher Motors, I think definitely these were below expectations, and I think there was a significant amount of headwind, as far as the margins are concerned. My sense is that these budget benefits which the government has announced, plus the interest cut which has been announced by RBI, is going to definitely trickle down to some sort of buying, from rural markets, from urban markets, from the April quarter. It may take a little bit time, but two-wheelers seem to be the best position because these are small ticket items. So I think, companies like Bajaj Auto, Hero MotoCorp could definitely gain. Hopefully, once volumes start increasing, because most of these companies have suffered a lot because of a cutback in consumption. So I think, overall two-wheelers, we are positive. We are positive on Mahindra and Mahindra because we feel that they have a fairly large order book. And I think the kind of product categories the company operates, there's a very little chance of company, underperforming. So I think clearly at declines, M&M could be a good portfolio addition. And Bajaj Auto and Hero MotoCorp, despite the headwinds currently, could be added to the portfolio, from a slightly medium to long term kind of horizon.
Hmm. Right. Okay. Osho, anything that you've spotted in the FNO space in the interim? What's looking good today?
See, overall, there are very few counters which are actually looking positive for the day. Majority of the counters are still into red and having a kind of a breakdown. So I'm expecting that for the day there can be a decent movement that can be seen for the short traders. Counters like IRCTC is showcasing a kind of a breakdown. Counters like Coforge is showcasing a kind of a breakdown. So there is a possibility for day traders to have a kind of a sell view in majority of the counters in the market. And once if there can be any strong pullback that can be seen in mid and small cap companies, then only one should try to be on the buying side. For now, it's better to stay on the short side or better not to trade any very strongly on any of the counters for let's say another 1 hour or half an hour once the market stabilizes, because looking at the overall sentiments from the global markets, the Asian development, I'm expecting that there is a possibility for a breather in our market. Then accordingly one can definitely try to take a bet for the day, but overall view remains the same as sideways to negative.
Okay, fair point. Avinash sir, also wanted to get a sense from you on the entire consumption theme that we are discussing. How are you looking at FMCG players? How are you looking at consumer discretionary at this point in time? Do these pockets offer any value at this point in time to investors?
Yeah, I think Sakshi, within the consumer discretionary, I think one area which looks pretty interesting is the liquor space. I think before yesterday, United Breweries gave a very strong guidance of almost 15%, and again a price increase, which was much ahead of the street expectations. So I think
Correct.
clearly, I think almost all the liquor companies, which include like McDonald, then McDowell, then typically associated alcohol. Typically, these are companies which have now bounced back after a very long period of time, and consumption is one segment where I think this category could benefit significantly. The other category is the broader FMCG basket, companies like Marico, or for that reason, a Dabur or a Britannia. These are companies which would obviously benefit from the 12 lakh rupees exemption category, because these are small ticket items. And I think the markets are looking forward that volume growth would get a kickstart, maybe in the next couple of months. And once volume growth averages around 6 to 8%, you could see a good bounce back in most of these FMCG companies. So I think, these companies have always traded at fair to expensive valuations, but they enjoy a very strong brand, a very good franchise. So I think clearly, investors who want to take a slightly longer term call can definitely use the weak market to add positions here.
Okay, fine. Let's actually look at some of the other stocks and spot some stocks for our viewers within the Nifty Next 50. There are very few. I think beverages is something that's a buzzing. Varun Beverages is up and about, but very few and far between stocks that are up. Let's look at even the top gainers within the Nifty 500 basket. Are there any names that we can really discuss? Indo Count Industries is one that's buzzing about 6.5%. Fiber Web is up. You also have very rare names that we hardly discuss, on the show, but largely on the lower side, you have a lot of names like Gensol Engineering, Kirloskar Oil, giving up all those gains in the recent past that were made. Time Technoplast is down. Ircon International, I think this is an earnings impact that you're seeing on Ircon. Gopal Snacks is down in trade. You have a lot of office space solutions, recently listed stock that's also down sharply in trade. Let's understand from you, Osho, within the broadest index, Nifty 500, on the gainers and the loser side, what exactly do you spot as opportunities?
See, from here onwards, again, it is very difficult to have any kind of a positive trend in majority of the broader space or a broader market, because there has been a very relentless sell-off in mid-cap, small-cap companies, and the same is being forecasting with the next Nifty Next 500 also. So I'm expecting that one should wait for the market to get stability, because at these market conditions where there is strong volatility with strong swings on both the sides, majority on the selling side. So one should not be in a hurry to accumulate or to buy at these kind of a dips for mid and small cap companies. No doubt for large cap stocks, there is a possibility to start accumulation. But from a larger time horizon, one should definitely wait to accumulate the counters. For day trading purpose, yes, definitely there will be an opportunity to accumulate some of the counters, and majority are on the short side. So I still have a view that one should wait for another half an hour or 40 minutes to see whether the market stabilizes on the higher note. And if there is a possibility of pullback, then definitely try to look for opportunities on the buying side. But for now, majority of the auto companies, pharma companies, apart from steel, I guess every other sector is looking weak to me for the time being. So one can definitely stay intact with the view of bearish sentiments in the market and look for opportunities on the sell side for now.
Okay. Avinash sir, I also wanted to get a broader sense from you. There's this entire debate that's on that whether you should stop your SIPs or you should continue your SIPs, especially in the mid and the small cap space when the markets are in this downtrend. What is your own understanding? Because the retail investors at large are now getting confused. We are already seeing some indications of people probably withdrawing their regular SIPs, or there is some shutting of demat accounts. As some reports are saying, there is no clarity as to how much the impact is because of the 4-month downtrend that we are seeing in the markets. What's your own sense here?
No, I think, Sakshi, first of all, I think the panic in the market was created, after some fund manager actually went on record saying that it's a time where, investors could lose a lot of money on mid caps and small caps. Now, this is a personal view, so everybody has a valid point to make. But one broad indicator which I think investors should realize is that a lot of money has been made by retail investors, in a very short period of time. So I think making money in the earlier years was very easy. I think now markets have become more challenging, and I think investors need to take a slightly longer term call. Return expectations have to be moderated because unrealistic expectations and very fast upside in equity values has actually made investors think that equity is a very easy asset class. So I think coming back to the main point whether SIP should be continued or not, I think if you have a 3 to 5 year view, then I think SIPs can definitely make money for you. You need to be convinced and you need to be patient because in these markets, if you stop an SIP, I think ultimately you are losing out. You're booking a loss, and you are taking a hit on your capital. So I would say that investors should not get worried on this correction. These corrections have happened in the past also. We have seen many cycles. I've been in the market since '92, and I've seen the worst cycles happening in 2004, 2008. But the markets have bounced back. So I think India is still a long-term story. Structurally, I think there are going to be lots of opportunities available. So I think you got to keep the faith and stay invested. I think if you come out of this game, you are unlikely to make wealth from equities.
Thank you, Avinash sir, for giving us that perspective. You're somebody who's been watching the markets for fairly too long than any of us have actually been trading or investing or looking at into the markets. For new first-time investors who entered post-COVID, of course, this is the first time that they're looking at the markets in a downtrend, and this really helps them out in clarifying their mind and not reacting on an immediate panic basis when the markets are down at this point. Appreciate your time with us as always, Avinash sir, for being with us on the show on Business Today Television. Viewers, we'll take a very quick break right now. 100 points lower on the Nifty, 22,966 currently on the Nifty. But we'll be back and Osho will be with us to help us understand what next after 100 points of a loss in the first 15 minutes of trade in today's trading session.
Karnataka has established itself as the leading hub for electronic system design and manufacturing in India, contributing 10% to the nation's electronics output. We are also home to 400 plus MNCs with global R&D centers. With over 100 fabulous chip design houses and 40% national share in electronic design, Karnataka stands as a prominent hub for chip innovation in India. Invest Karnataka 2025 will bring more global players to benefit from the state's strong and tech-enabled ecosystem.
Okay, so the markets are actually correcting even further, 124 points lower, 22,945 at this point in time. The Nifty bank is also 0.5% lower in tandem with the benchmark index. Broader indices are further weak. When we look at the mid and the small caps, they have now drifted further lower. Both the mid and the small caps are down nearly 2%, over 2% cut in just the first 15 minutes of trade. Similar story panning out for small caps and mid caps as yesterday. First 15-20 minutes and you've seen the broader markets come under severe pressure, 2% each for these two pockets. Realty index giving up further gains. It's been one of the top losing sectoral indices in the last 2 to 3 odd trading sessions, continues to drive down lower. 2.2% cut. The Nifty Realty was the first sectoral index that has actually entered a bear market territory. It's now down 26 to 27% from its peak that it had hit in June. So keep that in mind. Consumer durables 1.8% lower. Oil and gas 1.6% lower. Autos down 1.5%. Pharma down over 1%. FMCG down 0.7%. PSU banks, private banks 0.6% each. You have the metals that are down by 0.2%. So they've given up their initial buying that was emerging. Only the IT sector remains the sole winner in the sectors today. 0.5% gains being seen on that one. And of course being led by some large private sector banks at this point, large private sector IT names at this point in time. But the rest of the pocket again seems to be getting into a bear grip. 22,950 Osho, how are you reading the first 15 minutes of the candle?
Going through the option chain analysis of Nifty. So still now 23,000 is holding a decent OI concentration. So I am expecting that 23,000 put writers are still having a hope that market will rebound and they will their positions will again come into positive territory. But so I'm expecting the same, that once there is volatility in the market, but there is a possibility that a market can get a decent pullback in today's trading session. So I'm expecting that 23,000 still has a very strong writing position, and looking at the overall data, there has been no covering in this strike as of now. If it happens, then there will be very strong sell-off that can be seen in the market. So 23,000 still is having a kind of a hope for the market to get a recovery in the day. If it happens, then there can be a possibility of majority of the counters to coming back into positive territory, if not into very strong positive movement, but at least at the opening levels of majority of the counter. So I'm expecting that until that level is, or the data is still having the same view, so one should definitely try to look for any pullbacks. If it happens, then one can be aggressive in buying this market at these levels. But until it crosses the zone of 23,000, one should not be very much aggressive and should wait for further stability in the market. Looking at the overall stock or the sector specific movement, then majority of the stocks are looking very weak on the technical front, and also have seen some kind of strong breakdown in majority of the counters across different sectors. So one should definitely try to gauge momentum in those kind of counters. I initially quoted IRCTC. Now even some of the banking sector is also looking very weak. The reality sectors are looking weak. For example, Canara Bank from the PSU Bank counter is looking weak to me. So one can look for opportunities in stock specific front for a sell side kind of a view, and again not be very much aggressive on either of the positioning, either on long or short side.
Fair point. Okay, let's look at some stocks now, viewers. There is some momentum on the stocks, and you should be looking at why these stocks are reacting the way they are. Vodafone Idea, there's a 5% cut. This is after the company has reported a net loss of 6,609 crores for the quarter. Even though the losses have narrowed, but you do see that the stock has further corrected about 4% right now. Let's look at Berger Paints. This stock is in fact the top mover as far as the F&O space is concerned. The company's net profit declined by 1.4% year on year in the third quarter, and this is coming at 295 odd crore rupees. But you are seeing a positive, just flattish with a positive bias as far as Berger is concerned. IRCTC, the Railway Catering and Tourism Corporation, has reported a 14% surge in its net profit at 341 crores for Q3, and therefore you do see the stock still declining about 2 odd percent, and the railway stocks coming under pressure. EIH Limited, again a hotel space stock that most of our viewers also keep tracking. So this Oberoi Group of Hotels company, EIH, has said that it will not proceed with the investment in the mixed use project in Pune. The company has had also announced an investment of 254 crores to acquire a 51% stake. So after that, there is a decline since the company has withdrawn their plans. NBCC, the company has sold 1233 housing units for 3,217 odd crore rupees in an e-auction in a new project in Greater Noida. You do see flat with a positive bias on this one. Then there is HAL, the company is aiming to go for a $2.2 trillion rupees order book by 2030. The company already has a 1.2 trillion rupee order book on HAL. The company adds to add another trillion rupee in terms of the order book right there, but the stock is still under pressure. We have been consistently seeing huge sell-off in the entire defense portfolio. Signature Global, this stock was up and about in the last few days, also ahead of the earnings. The earnings have come in, and in fact the company has also recorded a pre-sales of or sales booking of 8,670 crores in April to December period of 2024-2025 fiscal year, and therefore you do see this is an annual growth of 175 odd percent, and that's a growth that you are seeing on this one. So those are some of the stocks that are reacting, but let's look at what Osho is penciling in right now. Osho, anything else that's caught your attention?
Yes, the insurance companies are also looking weak to me. Companies like LIC, SBI Life, these counters are looking weak and are on the verge of giving a breakdown. So there is a possibility that there can be a further continuation on in the sell-off in selling these counters. LICI is having a kind of a breakdown from the zone of nearly 810 to 800 levels, and now is hovering around 784. So I'm expecting that looking at the trend in this counter, there is a possibility for testing the zone of 770 and 768 in the short term period. While on the higher end, again 800 should be acting as a resilience or the resistance for this counter. Again, for SBI Life, the view remains on the negative side. It is at a very strong or a crucial pivotal zone of 1400. If there will be a continuation below 1400, then we can see a drastic plunge for approximately 45 to 50 points of lower movement in SBI Life. So one can definitely keep this counter in their radar. Any breach below 1400 can give an opportunity to sell the counter for nearly 1345 to 1350 kind of a target.
Okay, fair point. Let's look at the IT pack. That's the sole winning space that we are seeing at this point. Osho, within the large IT sector names, any stocks that continue to give you comfort even at these levels? Do you think the defensive play might continue to be a favorable theme for investors in this volatile time in the market? Is IT a favorable space?
See, IT is having a very strong stability at present because majority of the heavyweights like HCL Tech, Tech Mahindra, Infosys, all these counters are having a very strong consolidation. So there is a possibility that once the market or a buying emerges in the market, then there is a possibility for IT companies to give a consolidation breakout. But as of now, there is no strong breakthrough or a strong movement that is being seen in the IT companies. Obviously, they are being a stable counter, so there's no worry also on the selling front. But overall, the counter are on a sideways run. So majority of the heavyweights like HCL Tech, which is hovering well above the 1700 mark and is holding from more than 10 to 12 trading sessions. So I'm expecting that in the short term period, there is a possibility for gaining strength, but the signal still lacks, and one should wait for a convincing signal to come into picture for a consolidation breakout in majority of the counters from IT. For example, HCL Tech and Techem both are looking very positive on the technical front, but again one should wait for a decisive breakthrough to accumulate, and if someone is already holding, then there is no caution or worry in holding these counter. One can definitely continue holding this counter from short term to long term period.
Okay, so that's as far as the IT space is also concerned. Well, even the IT pack is now just about what 0.4% higher. The India VIX is actually increasing in terms of volatility, 15.1 levels now, 2% higher at this point in time, and that's the key risk factor. PSU stocks, all of them have slipped into the red. It was SAIL that was hovering higher. That's also given up most of its gains at this point in time. Looking at some of the other pockets, housing finance, NBFC names very far and few between. You have Fed Bank, Sundaram Financials, GIC Housing that's still up and about. Within the PSU banks, it's only Union Bank that's up now. Rest of them have all slipped in trade. Let's also look at what else is looking positive at this point in time. Well, very difficult to really spot anything on the positive side at this point in time. In fact, negatives you have a lot. Gensol Engineering post the results, that's 13.8% lower. That's the kind of impact that you're seeing as far as the results impact are coming in. Ircon International has lost 7.7% in trade. So wherever the earnings are actually not coming in conducive, you're actually seeing the markets further punish these stocks in a stringent way, and market is taking any cue from anywhere to fall into the deeper red at this point in time. Any trigger on the negative side is causing huge pain to the entire space sector stocks at this point in time. We are inching closer to 22,900 now, 155 points lower in trade on the Nifty as well. Let's actually look at the index contributors at this point in time. So Reliance is in fact contributing 50 points to the decline as far as the Nifty is concerned today. You have M&M that's contributing 21 points. You have ITC contributing 15 points. Axis and HDFC Bank contributing 12 and 8 points each. Trent and SBI also contributing on the declining side. But let's talk Reliance Industries, Osho. Now inching closer to 1200. How would you look at this one? This stock has actually had a negative year of 2024, a first one in the last one decade, and even in the new year, the signs have been only towards the weakening side. That's also post the earnings that came in. Nothing has really helped the stock revive from those lows, and in fact, we have a risk of slipping below that 1200 mark as well, 2.5% lower. What is your suggestion to all the investors holding on to this stock? Would you see this as an opportunity to average?
See, overall for Reliance, firstly, this counter have seen a decent correction and has been consolidating from the last 6 to 7 trading weeks around the zone of 1220 to 1280 kind of a scenario from the last 6 weeks. But this kind of plunge in the Reliance industry will definitely hit the market. Although looking at the technical placement, this counter still holds to be at a very strong support base. The neckline of the breakout was near about 1220, 1230 odd levels, and it was hovering around the same levels from a very long period of time. And with today's kind of a correction, yes, that might trigger some kind of worrisome to the market. But overall, I expect that such big companies or heavyweight companies should not give the very strong caution to the investors, because such kind of opportunity can be seen as an opportunity to accumulate. Although this is not the level where one should try to accumulate or average the counter, wait for the counter to stabilize or hover around the zone of back into the zone of 1240 to 1250, then that will be an apt zone to accumulate this counter. If such kind of sell off still continues in Reliance, then one should wait for the stability, and from here onwards the next potential support which should not come is near about the zone of 1160 to 1150 odd levels. So that is the next potential support for Reliance. If it comes, then one can try to accumulate or average the counter, else try to buy on the higher levels of 1220 to 1240 odd levels.
Okay, got that. So I hope this has also cleared a lot of views as far as how Reliance Industries should be looked at the current levels. Anything in the energy basket that stands out for you? We are actually looking at ONGC, the 6-month beta highlights its market position for sure, and this has been a stock which has been good one to hold in the last year, but again there is a lot of volatility in this year too. How would you look at the energy basket led by both oil and gas majors like ONGC, or even in the upstream downstream makers like OMCs as well? How would you look at this space?
See, overall, the whole space is into a downtrend. There can be a possibility of consolidation or sideways movement in the space. But looking at the short-term perspective for these counters like ONGC, which you mentioned, is hovering well below the short-term moving average. Counters like BPCL, HPCL are also struggling towards the 20-day exponential moving average. That means the short-term trend is weak for these counters, and the long-term trends for 200-day simple moving average is definitely very high from the current level. So I'm expecting that there can be some challenging phase for these counters in the coming period. Once the counter stabilizes or sees or witnesses a very strong buying traction, then only one can look for buying opportunity. Else, stay sidelines from these counters at present. Once the counter starts gaining some buying traction, then only try to enter into these counters from a investment point of view.
Okay, fair point. That's as far as the energy names are concerned. When we look at the defensive play beyond IT that we've discussed, do you also look at some promising names coming in on the pharma pack as well? Osho, 200 points down now for the Nifty 22,870 at this point in time. First, let's actually address the Nifty itself, Osho. After this bloodbath yesterday, again 200 points of a loss on the Nifty, 22,873. We've drifted lower in the first half an hour of trade, and we have tested 22,900 now. Your sense?
See, honestly, I was not expecting such a continued sell-off in the market at this very early hour of the trading session. So I was expecting that, looking at the overall global scenarios, there can be a pullback or there can be a breather that can be seen in the market. But the kind of sell-off that has been continued, with now the put writing has started getting some kind of covering at the zone of 23,000. So there has been a strong accumulation of put writing at 23,000 strikes, and now they are shifting positions to 22,700 odd level. So there is a possibility now that market can see certain kind of correction or a very strong continued sell-off in the recent period. But again, I won't say to enter in this market on the sell side or even on the long side. Better to wait for the market to consolidate, better to wait for the volatility to subside and then only try to accumulate or try to look for selling opportunities. This is a very vague kind of scenario where all the technical parameters are showcasing a oversold territory and still the market is having a relentless sell-off going on with itself. So one should not be very much in a hurry to either being on the sell side or being on the buying side for the markets. Once again, if there will be any kind of a buying traction returning back to the Indian equities, then only look for buying traction. Else stay sidelines. That will be the only advice that I can give to the traders or the investors for the short term.
Thanks a lot then, Osho, for sharing with us all of those details as far as how should the investors be really looking at the current realm in the markets. It does not look good, but we'll have to wait and watch to see how it really pans out today. Thank you so lot, Osho, for sharing all your views right there. Before wrapping up the morning edition, viewers, we'll just help you understand how should you look at this new IPO opportunity as well. So Hexaware Technologies, it's opening for subscription today and it will close on February 14. And ahead of the issue, we're already seeing the grey market premium of around 3.5 rupees, indicating about 0.4% of a premium over the issue price, so not too much. But the company has fixed a price band for its 8,750 odd crore rupee IPO between 674 to 708 rupees per share. This is an IT services company and the company is a pure offer for sale of 8,750 odd crore rupees as promoter Carlyle will be selling its stake here. Investors within the retail segment can actually bid for one lot of Hexaware shares, which will include 21 shares, and for this you can you'll have to shell out 14,868 rupees for one lot, and then you can actually apply for multiple lots. This will be the largest IPO in the Indian IT services industry, and it is also surpassing the record that was set by TCS in 2004 when it actually had raised 4,713 odd crore rupees as well. Following this IPO, Carlyle's stake will be down to 74.1% from 95% currently, and considering the higher end of the price band, there's an expectation that Hexaware will command a market cap of 43,247 odd crores. Remember, Hexaware had delisted from the Indian stock markets in September of 2020 when the company's promoters accepted the delisting price of 475 rupees per share. And now it's again relisting on the stock markets with a new price band of 674 to 708 rupees per share. What are brokerage houses really saying about it? Well, you have Anand Rathi in its IPO note that has said that the company is a mix of strategic and industry-focused partners such as ServiceNow, AI-powered solutions, various business functions such as human resource, IT, customer service, security, finance and Backbase as well, which is a banking financially services space. The company says that the PE comes in on the higher band at 43.1 times. And they also believe that they are giving a subscribe rating to the IPO because they believe on the valuation front it is fairly priced. On the other hand, SBI Securities also believes that the valuations are slightly cheaper than the peers as well, and the company has a diversified revenue mix in terms of industries, and it leverages AI to build solutions for its clients, driving improvement in productivity and gains in utilization. They have a healthy cash balance, and therefore they have given a subscribe rating for long term on Hexaware. With that, we wrap up the morning edition. I hope this has really helped you understand what the morning trading action has suggested to you, what are brokerage houses saying about the new IPO opportunities that are coming in, and what are some of our analysts really helped you understand how to trade the markets today, whether you should trade or not, or should you just wait and watch to find out whether there's a base building exercise that's happening in the markets. Stay tuned. We will continue to track the markets for you throughout the course of the day, and we will also take up your queries at 12 noon on daily calls in this falling market. In case you are confused about the stocks you're holding, then write into us for daily calls.
Invest Karnataka 2025 is our chance to showcase Karnataka's best to the world. The business community startups, academia, and even youngsters, I invite everyone to be part of this mega platform. From February 11th to 14th, let the world witness why Karnataka is the best destination to invest.
All roads leading to Prayagraj are jammed, and literally an unprecedentedly large number of vehicles driving towards the Sangam city for the Mahakumbh clog the national highways across North India.